So everybody's bugging me to give short-term or any kind of predictions with regard to Tesla stock. Predicting the stock market is a particularly dangerous fool's errand, but I'm going to do my best to give you something of an answer, some kind of a direction. I am not a financial analyst. This is not financial advice. As they say, do your own homework. This is for entertainment purposes only, and I'm probably wrong. So with all that said, I'm going to base my analysis primarily on macro and micro catalysts. That's how I see the market. I've mentioned before that I'm someone who has a couple of philosophies. One of my philosophies is that every day is a new day in the stock market. So if you're making decisions about getting in or getting out, or if you're a short-term trader, I've done some options trading, count every day as a brand new day. What's going on today that would compel you to invest where you see that there is a higher likelihood of something going up if you're a long purchaser. If you think the stock has a great chance of going up and a very small chance of going down, then jump in. But don't be frightened off by your last wrong decision. What is the decision you would make today if this was the very first day you had ever invested? That's one of my major approaches. That kind of summarizes my approaches. All right. We're going to talk first of all about where do I think the stock is going. I don't think it has much lower to go. I can't see how it goes under 100. Maybe it goes on. Maybe it does. Maybe it goes to 88 or something. But that would be probably because of the macro. I don't think it's going to happen at this point because of anything that's going on with the stock itself, any of the fundamentals. I am not a technical analyst. I do look at the charts a little bit just to kind of see if there's some patterns that I can glean. But for the most part, in case of Tesla, I mostly want to know what's happening fundamentally. And fundamentally, I can't imagine that there's any chance to drive the stock. I can't imagine that it got this low, but I certainly can't see how it goes lower. And if it does, there's a low likelihood and a very low, very few percentages to go yet. But on the upside, I definitely think the stock could easily get back. This is crazy. This is where you're going to go, okay, this is only for entertainment purposes. I think the stock could go back to $400 this year. But a bunch of stuff has to happen. And the very first thing that has to happen before any of these other catalysts are going to be of any significant benefit is that the market has to go back into a risk on, or at least a risk neutral mindset. Right now, the cash is off the table. There is more cash on the sidelines now. I think it was Kathy that said this the other day, Kathy Wood that said this the other day, more cash on the sidelines right now than at any time, maybe in history or certainly in decades. I don't remember the exact stat on that. You can look it up. So tons of cash on the sidelines, and it's waiting to feel more confident and more comfortable about the macro situation. Less noise out of China, less noise out of the Ukraine, less noise about a recession. So when the noise starts to lift, or the other thing that can happen is itchy fingers. Folks that, even institutional investors, folks that are investing money for other people, they get itchy fingers. They don't like to just sit there and be calm in the bond market or in treasuries or something and making a little bit of money. They want to make a lot of money. They want to prove that they're better than the next guy. So there does tend to get an itchy finger situation out there where you'll begin to see, and sometimes these are the false moves, the fake bulls and whatnot that go right back down and test the lows again. But if there is actual stuff going on in the macro that causes people to feel that they can get back in and take some risks again, then that would be the biggest thing that could affect Tesla stock in the short term. So what are those things? I got a few catalysts. I got, 6 catalysts. Another month where the CPI is even better than this month's CPI. Does it have to be a lot better? Just has to be better. Just continuing to get better and show that, in fact, we're moving in the right direction with regard to inflation. Number 2, continued softness in the bonds, as you may have seen on some of my other videos. It is, Kathy Wood has talked about this. The bond market doesn't agree with the Fed as to where inflation is right now. You can buy 10 years for 3.5%. So way under what the Fed is talking about. So it looks like if that softness continues, that would be a pretty good catalyst. Number 3 would be dovish commentary from the Fed. If the Fed commentary, if any or several of the different regional people start to talk in terms of, well, it's looking better, any kind of dovishness. Certainly if we see any dovishness in the Fed analysis after the next meeting, that would be extremely bullish. Number 4 would be time. Oh, I mentioned the time. Cash on the sidelines has a tendency to want to get off the sidelines and get back into action. Any news in terms of China or the Ukraine. So China right now, are they going to go to war with Pakistan? Are they going to go with Taiwan? Are they going to go to war with Elon Musk over the expansion of his facility because he also owns Starlink? COVID hot, COVID cold. So much activity, so much stuff out of China. Are they in recession? Are they breaking out of recession? So much. We need some stability in the China story. And then any break in the news with regard to the Ukraine, peace talks. I mean, they have to actually turn out to be something. But yeah, if there was any positive thing in the Ukraine situation, that would certainly pull a lot of money off the sidelines. And you'd probably see at least some kind of rally. Whether it was long sustainable or not, hard to call. But if you see a bunch of these or 2 or 3 of these things happening, we're off to the races. All right, so those would be the macro items, because the items that are Tesla specific that we're going to go into now, it's really hard for a go-go company, for a flyer like Tesla to have their news move the market when the market is so hunkered down. And that's what we've been seeing. We've had good news, a little tiny bit of bad news, but mostly good news for the last 3 or 4 months, and none of it has mattered because the market is so risk off. Okay, so what are we going to be looking for from the specifics? So one would be less controversy from Elon. That would be something I think we would all, I don't mind the controversy from Elon, but the stock probably is being affected by that controversy. So maybe a little less controversy, or maybe what the heck, Elon is not really like a dyed-in-the-wool conservative, as he's been called, a MAGA. No, he's just barely over the pivot, as he pointed out himself. So he has some more liberal views of the world. Why not give the left a bone? Pick something that he really believes, something that he is passionate about, that the left likes, and just, tweet that out. Give them a bone, give them a couple of bones. Maybe that would settle things down. All right, but it would be remarkable. It would be another headline, okay? Oh my gosh, Elon still has some of his liberal leanings. Number 2 would be if the waiting times for China and the United States, it needs both. If the waiting times for new deliveries for Tesla cars in China and the United States start to move out to 3 weeks, 4 weeks, once again, because of all these price cuts or because of whatever, any reason, you start to see those numbers get longer, that is going to be bullish. By itself, it's not going to move the stock much. It might move it a little. I would say it'd be a pretty serious catalyst. So even if the risk-off market continues, that one could actually start to see some upward momentum. Not to the moon, but some momentum, especially if it maintains, if it continues over several weeks or months. An earnings beat, Q1, especially if it's accompanied by believable, solid, confident guidance. By the time we get to the earnings call, I think they should be able to make some confident statements with regard to production and with regard to deliveries, because the effects of the IRA and the price cuts should be pretty well known by the time we get to earnings call. In addition, they should be able to make some confident and solid statements regard to the energy storage thing, which if you follow this channel, I broke the story in the book, in the Elon Musk mission. We broke the story about the energy storage ramp. And since then, it's gone crazy because of other great reporting by Zero Sum Game 33 and others on Twitter. Congratulations to him for that. But we'd like to hear from Tesla's own mouth now. What is the plan on the energy ramp? What's going to happen next? So that could potentially good earnings beat as well as good guidance probably again would make a difference. It might move the market 10%. It's not going to go crazy, but it might move the market 10%. It's rare to see after earnings to see Tesla stock go up significantly, but this is a time when there might be a couple of shocks in terms of earnings as well as guidance. Okay, number 5 would be the March 1 investors meeting. Oh boy, so much potential for that meeting. By that time, I'm thinking the market is going to be starting to get a little looser, a little more risk on. And so the new car, when that's introduced, I'm sure it's going to be introduced. I think there will be a car and also a robo car, if you will, a robo-taxi version. I think it'll be on the same platform. And I think that they'll both be announced and it'll be explained how it's on the same line, or it can be, whatever. If the car looks good, if the car has good specs, if the car has the right price, if the car has some kind of a realistic expectation in terms of when it's going to be started in production. And if that's no longer away than, let's say, Jan 1, preferably even before that, maybe starting to get a few out in this year, all of those things, anything in terms of that Generation 3 car is going to be a potential market mover as long as it's positive. If people think it looks ugly or it's got some kind of a problem, in terms of specs, everything is off the table. But I don't think that's going to be the case. So those would be really huge. And then at that meeting, if they haven't really gone into details about the energy storage at the earnings call, hopefully at the March 1 investors meeting, they'll really lay it out in terms of what's going to happen with the energy side of things. Okay, another huge catalyst, especially if the market is turning risk on rather, would be the delivery of the first Cybertruck. I would think that could be at the end of the second quarter or sometime in the beginning of the third quarter. We should have a delivery of a Cybertruck. Now, maybe at the March 1 meeting, they will actually drive around the final version of it. That could be slightly additionally incentivizing for people to get off the sidelines. But actually delivering Cybertrucks, getting a few out into the wild, that would be great. I'm just going to throw in one that I wasn't planning on, so my numbers are going to be thrown off. Any reporting from the field by drivers of semi-trucks. Love to have some positive feedback from actual drivers and or the companies like Pepsi, some really solid feedback of mileage that they're getting, of charging times, of how much they love sitting in the center of the cab. Positive reviews. I think that could be a stimulus, a catalyst. Okay, so back to my numbering system. Number 8 would be FSD level 4 or 5, preferably level 5, with videos or other proof. Can't just be, oh, it's level 4, it's level 5 now. But what's the proof? One proof would be they go off beta. Another proof would be it's okay to sit in the back seat. Maybe that's not going to be quite where we are yet. Maybe it's just you don't have to touch the steering wheel at all ever. Whatever the proofs are, but just an indication of a serious step change, not a better version like version 11 that's coming out, version 11.3, whatever it is coming out soon. That's not going to move the market. What we need to move the market is going to be a significant step change where in fact you don't need to touch the wheel, or you can sit in the back seat, etc. I think you know what I'm talking about. But it's got to be significant, and that will move the market, I think, a lot, but not so much if we're still risk on. Okay, how about a price increase in the Model 3, Model X, whatever? If we see 2 months, I'm claiming that there will be price changes, more price changes throughout the year. I think this is obvious. There may be a down 1,000, down 2,000, up 1,000. There's going to be changes made by region, by car, by circumstance, as they look at the results of these price cuts that they've just made, and they look at what's happening in the various markets to the various cars. There's going to be additional price adjustments. If those price adjustments are up, and it's not because of the inflation of materials or some other reason why costs are going up, but it's just, oh, we're back to having such a long lead time that we need to raise the prices to keep from third-party flipping going on, that would be a pretty significant catalyst. Number 10 in my list would be the Model 3 Highland announcement. We don't know what the Model 3 Highland is, but I'm going to guess that this is going to drive the US price for a Model 3 down to maybe under 40,000. Maybe it's 39, 35. The China price, if the Highland is made in China, maybe it'll be even down to 29.9. Maybe the European also might be 29.9 once they start making it in the fall. If they start making it in the fall, that's not an absolute certainty, but it's been hinted that Model 3s will be made in Berlin in the fall. So if the Highland is the one, and it's got all the newest, greatest manufacturing processes or fewer manufacturing processes and parts, therefore it can be sold for less, and they can get certain price points that would be smart, that could be a pretty huge catalyst. Obviously, we've been waiting for the location announcements of new gigafactories. I think those will be catalysts. Again, they may be mild catalysts in a neutral market. If it's a go-go market, they would be, significant market movers. Personally, if the story gets told right about energy storage, if the street and the strong retail buyers and folks like you and me start to really understand and believe the energy profit and the energy potential, energy storage potential, and the numbers start to be put around it to where we have some confidence in how fast the ramp is going to be. Elon's talked about 100, 150, 200% a year. I believe that. I think it's going to happen based on everything else he said. I think it's going to happen. Now we need some stronger statements about the details, like where's the next mega factory going to go in? Maybe 1 or 2 this year. I'm estimating 2 to 3 per year, maybe even 5 per year, starting in 2024. When I say 5 a year, it could be big ones, or 5 like Lathrop at 40 gigawatt hours. Those would be, if the story is understood, then those will be big catalysts as new production capacity is discussed. So those are my basic and most significant catalysts. There are other catalysts that I've listed before, and you may have seen on my other videos. Go back, you can find other videos on the catalysts, but this is a new list based on today and all the crazy things that have happened in the last 3 weeks. If you have comments, I'd love to hear other catalysts that you think would actually move the market. I'd love to have you argue or debate with me that this is not going to happen, or that these things wouldn't move the market. I'd like you to share this with other folks. I'd like you to comment, and I'd like you to like, and I'd like you to subscribe. I'm running out. I'm trying to go through my list in my head here. The last one is join my Patreon group. So it's really been great talking to you.